Earlier today, I sold over half of my Tesla position, about 60%. I've been a Tesla holder thick and thin over the past 6 years since 2019. Even though the company's fundamentals were deteriorating for the last 5 or 6 quarters. And after seeing this latest earnings report, the numbers, and also listening to the call a couple of times, I'm going to be explaining why I sold it and exactly what I plan to do going forward. Let's jump right into it. Okay, so what I will say with regards to Tesla is it was one of my top three holdings, and it was my top holding for many years throughout 2020, 2021, obviously, because it exploded in value, and I've been trimming it all throughout. And you could say, wow, that was an amazing trade, but I also held it through the 3 year lull period after 2021 into 2024. So it gave back a lot of the gains that I had. But throughout all of that, it was largely backed by the fundamentals. The company was plateauing, sure, but it was still growing. It was still going in a positive trajectory. And the main concern there was Elon not being as focused as we would have wanted him to be. The company fundamentals have since started to deteriorate over the past year. And you could argue that its comparable periods are stronger and that they have company prospects and all of these other arguments that Tesla investors like to make. But I had to ask myself a question of how much rope do I give this company? How much slack do I cut them? And I did cut them quite a lot of slack. I mean, I've been one of the latest to sell the stock. I know Jeremy sold it much earlier. I know Tanner sold it last quarter before this earnings report. And I haven't sold out completely, but I'm definitely not against selling it out completely. I am actually thinking about selling it out entirely, but there's still something that holds me there as I want to have it in my portfolio. It's just that the earnings were horrible. If we looked at the numbers, I mean, every single metric for this business was disappointing. Every single metric you can see here is just negative year over year. And the business is not doing great from a financial perspective. They're not really doing great from a free cash flow perspective. That dropped off a cliff, down 89%. Revenue is down. The automotive revenue is down. Even energy generation and storage. I was really shocked at that one. That surprised the downside. A lot of Tesla investors, will say a lot of that was priced in. But I even listened to the earnings call. Elon didn't really sound all that excited to be there. It almost sounded like he just wanted to get the call over with. And we know that the macro headwinds are going to continue over the course of 2025 with the EV tax credits ending on September 30th. We also know that there's demand concerns globally with regards to their different geographies. And management's only real answer to all of these very valid critiques was, well, we're excited for Optimus and we're excited for Robotaxi. And obviously, I'm also excited for those things. That's the portion of me that's still holding shares and not selling out completely. But the fact of the matter is, and if we want to be very intellectually honest with ourselves and even listen to the earnings call, because management flat out said this themselves, that's all going to be coming over the next several years. We don't see any of that anytime soon. We are, whether we like it or not, in a catalyst lull or in a catalyst dry period for Tesla. The earliest we see some positive lifts from Robotaxi is going to be late 2026. The earliest we're going to see some positive lift from a financial perspective, obviously, for Optimus is realistically going to be later than that. We're in 2025 right now. We're going to see Tesla accelerate back in 2026 towards the back half of the year, but more likely is 2027 and 2028. And so the thing you have to ask yourself is this company warranting $1 trillion valuation when there's no real growth prospects over the next 24 months, let's say? And where does that leave us, right? As Tesla investors, that leaves us with no real growth prospects of how we're going to turn around these deteriorating fundamentals, which have been deteriorating for the last year. There's really no hope other than to say, well, you got to wait 12 months and then we can hope to see the numbers actually going back into growth mode and that plateau and that decline being a temporary thing. Now, of course, there's execution risk baked into that, but what are you going to tell investors? Tough luck for the next 4 quarters, because only after the next 4 quarters is the company going to go back into growth mode. Well, wait a minute. I just waited 3 years and the stock was completely in a lull. And I feel like a lot of the run that we had in November was on the back of that Elon Trump partnership, was on the back of the regulatory environment looking better, was on the back of the full self-driving robotaxi narrative. And I feel like that was the final catalyst for Tesla. The market was really waiting for the robotaxi launch in Austin in June. And that was the latest pump that we had into the mid $300 range. And right now, I think from a company perspective, we are in a lull period. I don't think there's any narrative or news to look forward to that could propel the stock forward over the next 12 months. However, there's a whole bunch of headwinds. There's demand concerns, tax credits, and obviously the deteriorating fundamentals. And the reason why I talk about the narrative moving the stock is because this stock in particular, this company in particular, is driven so much by retail investor sentiment and by that growth story. And we are going to see a gap in that growth story. And so while I've been trimming my position over the course of this year, this was like the sixth earnings in a row that they've missed numbers. And the numbers looked so brutal. And even in past quarters when they missed, it wasn't really by big margins like this. Like the free cash flow looked pretty brutal. Obviously, they explained why this was the case. But the fact of the matter is that management didn't really sound all that engaged. The numbers are not looking good. It's a very tough time to be a Tesla holder. And I totally stick by what I've said in the past, in that there's a lot of execution risk baked into this. Like there's execution risk because we don't know if Elon's going to be fully engaged. We don't know if he's still going to be CEO in the next couple of years. We don't know that he's not going to take on some other project with XAI or focus on something else. And yeah, of course, you could have some partnerships between XAI and Tesla, like was hinted at the earnings call. I mean, they sort of deflected a bunch of questions around this. But realistically speaking, I think that the stock is going to pull back before it goes into new all time highs. Do I think that Tesla is someday going to be a multi trillion-dollar company? If they execute, I absolutely do. And it's the part of me that's still holding my shares is the part of me that believes in that because I've been holding my shares for so long for that reason. But I can't really have that much of an exposure to Tesla at this valuation with these fundamentals, knowing that the trend is downwards and knowing that there's no real growth narrative to hold the stock over for the next 12 months. If I'm looking for the best ROI for my money, the best return on my investment, I have to be looking risk adjusted. What is the easiest way that I can make that return? And if you ask me today to invest in a company that's declining 12%, that free cash flow just dropped off a cliff, and they have no major catalyst other than what? Other than expanding it to San Francisco for the robotaxi and expanding nationwide over who knows from a regulatory perspective how long that's going to take, I would say, well, why would I do that? Like, I would just invest in Amazon or I would invest in Meta or something I would invest in Nvidia. That's much, much safer and much more likely to hit those numbers with minimal headache because right now Tesla is priced for growth. But the fact of the matter is that the revenue and the fundamentals are deteriorating. And the next leg of growth that we're looking for is years away into the future. I think that the stock could fall into the 200s. I think it could even fall below 200. And if and when that happened, I would absolutely buy back in and build my position in a stronger way. Because at that point, the risk that I'm taking on is worth the reward that I would potentially be taking. I made a post earlier today and I said I cut my Tesla position, but I'm not against buying it back heavier. It would just need to fall much lower to reflect where the company is currently. And one of the comments said, well, are you all of a sudden a short term investor? And I had to think about this, right? Because I have held through tough periods in Tesla's past before. But the difference was that back then I held through temporary blips in that growth story. And the company, by and large, still had a lot of good prospects. Whereas right now, you have a gap in the prospects. And on top of that, the fundamentals have been deteriorating for the past 6 quarters. And it's not just me trading in and out based on this earnings. It's really an accumulation of those earnings and of the prospects that I believe them to have over the coming years. Do I think that Tesla is going to go back into growth mode in late 26, 27? Absolutely, I do. Do I want to be in Tesla in a much larger way at that time? Probably, because the risk is going to be equivalent with the reward. But right now, at this valuation of $1 trillion, the risk is not equivalent with the reward. If Tesla were to go $200 or under, and all of a sudden it's a $300 billion company, then maybe the risk is going to be worth the reward again. I'm just looking for, on a risk adjusted basis, where can I get the best ROI for my money? And the fact of the matter is that it's not Tesla right now. And I want to throw this up because I really appreciated this post from Jeremy. Jeremy sold, a couple of months ago before this earnings. And I mean, he sold quite early, I would say, relative to others, because he sold in the mid 200s. And look at the numbers. Like the numbers are all negative. Like I don't know what you can possibly defend here for Tesla other than to say, well, buy them time because this is going to be a $10 trillion company. Like, sure, maybe, but both scenarios could be true at the same time. It could have a 2 year gap and it could still be a $10 trillion company 10 years from now. Jeremy said here in his post, what would it take to buy Tesla again? And I totally agree with all these points. Number one, I would need to be confident that they can grow automotive sales again at a 20+% CAGR, not declining 12%, growing by 20% plus. Number two, the price has to come down. It is not reflective of a company that's declining to have a $1 trillion market cap. Number three, EPS to stabilize and to consistently start growing again. Number four, gross margins and net margins to consistently start growing. And finally, and one of the more important points is Elon to quit doing stuff to hurt the brand. Tesla would have been consistently growing automotive sales last couple of years if he hadn't hurt the brand so bad. Jeremy says that he wants to pick it up under 200 or even under 100, but ultimately that over 300 is a horrible risk reward for the next 2 to 3 years. And I could not have phrased it better myself because I entirely agree with that sentiment. EPS is not stable. Revenue is not stable. The growth is not here. The catalysts are not here over the next 2 years. And Elon is disengaged. And if you don't believe me, you haven't been listening to the earnings call closely enough. He was absolutely disengaged on this last earnings call. I mean, just listen 2 or 3 earnings calls ago. The revenue would be falling, and then he would hop on and he would talk about all of these prospects and start pumping the stock. And you would think, oh, wow, it's okay. I can take a temporary blip. But to see him also be disengaged on this earnings call and not really excited, not really wanting to be there, that to me was a big thing, right? Because I want the CEO to be there. When he left to go and buy Twitter, the stock took a real tumble. When he left to go and start Doge, the stock took a real tumble. And now he's kind of straddling, 1 foot in, 1 foot out in Tesla, focusing on some initiatives, but also talking about politics and starting his own party and doing all of this other stuff. And so it's a combination of different things that led to my decision to cut my Tesla stock. And quite frankly, I probably cut it too late because I wanted to give them an extra couple of quarters to see if they would actually start to turn it around. But I'm actually seeing it get worse from an underlying fundamental perspective, not just in the numbers, but also in the prospects and in the sentiment of management in their ability to execute. So that's the story. I cut my Tesla by about 60%, and I wouldn't be against cutting it more. But obviously, if it fell under $200 and if the risk to reward ratio became more favorable, I love the company. I love the prospects that they have, just not for the next 12 months, not for the next 24 months. So we'll see what happens. But I want them to go back in the growth mode. And I just don't think that that's going to happen over the immediate short term. And I think that there's better opportunities out there in the market over that same time frame. And I know I'll catch a little bit of heat in this video because Tesla was my second largest position. And now it's a fraction of that. It's single digit percentages in my portfolio. And I'll probably be trimming even that little amount that remains. We'll see what happens. Of course, I am happy to be proven wrong if it goes to 450. But if it does pump higher, I'll absolutely be selling it all because then the valuation completely makes no sense because management in their own guidance is quoting for something very far out into the future. Anyways, hope you enjoyed this video. That's my spiel. That's why I cut Tesla. And looking forward to reading your comments below. Thank you so much for watching. I'll see you in the next one.